Alrighty, we are live. Hello, everybody. Good morning, good afternoon, wherever you may be. Thank you so much for joining in on the webinar today, and to Dan Adams from Bullish Bears community for being our guest today. And thank you, everyone in his community that has joined to learn a little more about Raindrops and just how we use TrendSpider on a day-to-day basis. One thing, just housekeeping things that I want to mention here. Disclaimer. Anything that we talk about today, we're really just highlighting some of the key core features of TrendSpider. We're not necessarily telling buy or sell, anything like that. These are simply stocks that we're kind of doing case studies on for different features like automated trend lines, blue raindrops. We're definitely going to be focusing on that a lot. So just want to be upfront. None of these are buy or sell signals or advice to buy anything. None of us are licensed. We're really just, trying to show you guys how this works. So for those of you who have not heard about TrendSpider, just a quick overview. Our vision is really one thing and one thing only, and that's to innovate and to make the world's most fully integrated all-in-one trading and analysis platform, both for retail and professional traders. So we want to not only innovate, but innovate the way these processes are done so it's a more efficient process. And so you're not having to stare at the chart all day to wait for a specific setup to occur. The system's doing that for you. It's your secondary perspective on the market. It's your second set of eyes. And that's what we're really aiming to do here. So some of the problems that we're aiming to solve to make your life easier are, one, removing bias in curve fitting. So essentially, when you're going to draw a chart manually, it's very easy to draw a chart that may have some bias to it, that may, be a little geared towards your position, whether that's a long or a short position. And so what we do with TrendSpider is we really try to automate some of the processes of technical analysis by complementing your discretionary analysis, not replacing it. So what we like to do, and what I like to do a lot of the time with the platform, is draw my own trend lines, but then overlay my own, overlay our automated lines on top of mine to see if there's any lines that I may have missed, or if there's an obvious wedge or a triangle that I just completely missed because I was too focused on having a bias on the chart. So that, that really falls into not only biases, but hand-drawn inconsistencies as well. Our automated trend lines and fib levels are really using math to make things consistent across any chart that you're looking at. Fear of missing out. It's very easy to get really into a trade or get really overexposed to a trade, and then all of a sudden it's the only thing you're thinking about, and you're emotional and you want to do this and that and everything. That's generally a way to blow up your account pretty quickly. So what we want to do with removing that FOMO is introduce the alerts, giving you the ability to let your different strategies, your different conditions come to you, whether that condition is a trend line bouncing off, price action bouncing off a trend line, or the RSI breaking through something in the MACD crossing above the zero line. We want to let the market come to you and you not chase the market just because you want to, click the button. As I mentioned, timing inefficiencies, missing key reversals. There's a lot of the time where you can't stare at the chart all day. And that's what the system's there to help you with, is be that second set of eyes where it's looking for those crucial, critical conditions you're looking at, so you're not staring at the chart waiting for those things to happen. That falls into impatience as well. Even if you are staring at the chart all day, you have to be patient. You have to wait for those things to come to you. And especially if you're someone who likes to draw charts. After the 10th or 12th chart, if you're really getting into it and looking for these channels that really have mathematical properties, like a lot of hits on the line, a lot of bounces on the line, that takes a lot of time. The system can do it in a couple seconds. So we'll go over all these things, but especially those people who are really looking at staring at a ton of charts, more than 10, it's really easy to just flip through those charts and have the system help you out with some of that grunt work. We do this through 4 main functions, and that's the backtesting engine, the automated technical analysis system, the multi-time frame analysis, and the cloud-based alerts that I just talked about. So we're going to be demonstrating different aspects of all of these features, so definitely excited to get started. And from here on out, I'm going to hand it over to Dan. He's going to go over a few things, and then we're just going to kind of have a fireside chat and kind of go over some of the charts and how we're using the platform to do that. I'm also going to do a quick little lesson on Raindrops before I hand it off to him. It's going to be 2 to 3 minutes, just giving you a general idea of how they work, and then I'll hand it off to Dan, and we'll get this thing going. All right, so for those of you who have not heard of the Raindrop, this is essentially a volume-based candle. So when you're looking at a general candle, whether that's a hollow candle, a regular candle, those are based on the open and the close price. They're not based on what the VWAP is for the first half or the VWAP is for the second half. And what we're doing with the Raindrop is, instead of just looking at these arbitrary areas on the chart, such as when the price opened at a specific time or when the price closed at a specific time. Not saying these aren't important, because they are, especially because they become a self-fulfilling prophecy because so many people look at these candles. But with the Raindrop, it's giving you more microeconomic information. What I mean by that is it's telling you about the supply and the demand and how the supply and demand is moving throughout a period. So you can see here, this is a Raindrop. One, we've got our bar here, this little thing that sticks out. This is the VWAP for the first half of the period, and that's the volume weighted average price. In the second half of this candle, we have the VWAP for the second half of the period, and that is the VWAP. Essentially, just you can see this, the bar, but then on top of the VWAP in this little bar here, you've got the actual volume profile. So you can see here, you've got the VWAP here, the VWAP here, and this represents the volume for this particular period. So during the first half of, let's call this a daily candle, during the first half of the day, most of the volume was focused near the low of the day. However, as we went into the second half of the day, you can see this crossing over. You can see the volume starting to flow towards the top and creating new highs here on the chart. So what you can see is, during the second half, all of this volume was buyers, and we know it was buyers because it was pushing the price up. So demand was outpacing supply, and that's why we have this green bar, because the VWAP during the second half of the period was higher than the first. So the color of the candle is really a function of the second half VWAP. So if the second half of the period's VWAP is higher than the first, it's green. If the second half of the period's VWAP is lower than the first, it's red, and you can see this here. And if both of these VWAPs for the first half of the period and the second half of the period are exactly equal, that is what we call neutral, or a blue Raindrop, or a true doji. And we call it a true doji because it's really taking into account the volume rather than just the open and the close being the same. This is the volume on each side is literally equal. The equilibrium for the entire period is literally the VWAP for the entire period. So one thing I wanted to mention, we showed the VWAP for the first half, second half, but this little dash right here, this is the VWAP for the entire period. So we've got your low, your high, your VWAP for the first half, your VWAP for the second half, your overall VWAP, and then how the volume is flowing throughout the day. So this is a lot of information that you can use and apply to your other layers of technical analysis, if you will. So I like a lot of the times to maybe look at the blue Raindrop and see what the blue Raindrop looks like on the hollow candle and get an idea of volume action versus just open and close action. So we're going to be going over a lot more of this, but I just wanted to give everybody a quick intro on how these work. And I'm going to hand it off to Dan now and let him introduce himself and start the charting.
Awesome. Okay, so let me get my screen ready for you guys. I'll have it ready. And let's see, actions, enable. There we go. You guys should be able to see my screen now.
Yes.
All right, awesome, guys. So thank you, Jake, for that awesome explanation on Raindrops. I know it, for a lot of people, they're probably looking at Raindrops going, wow, this is cool, kind of confusing, but the way you guys explain it is just absolutely awesome. So my name is Dan. I'm a member of the Bullish Bears community. This is our website. We have tons of free courses for you guys, just pretty much an unlimited amount of knowledge. We have candlestick course, we have live trade rooms, we have watch lists, and we actually just upgraded this tool section, which you guys will know if you go to trading tools, you will see TrendSpider up here and some other tools as well. But we love TrendSpider, so they're way up there at the top. So for me, throughout the trading day, I am always checking TrendSpider. Typically, I'm a day trader. I do some swing trading. But with Raindrops, it's really about finding these major tops and bottoms. So we're going to take a look. Jake mentioned to me that UNH was one of the charts that typically seemed to have a lot of raindrops that were major tops and bottoms. So I wanted to show you guys that first. You guys will notice I drew this trend line myself. You guys can click on drawings, and then let's see, click that. Come up here and draw a trend line. You guys can snap your own trend lines, just like Jake and a lot of people still like to draw their own, but we'll sometimes do the automation ones. And you'll notice this blue raindrop here. What's interesting about it is I look at these doji candles as indecision candles, right? There's an equilibrium, there's a balance, there's a fight between the buyers and the sellers. So it's at a major resistance point, and it might be a newly formed resistance point. It doesn't have to be a point that's well established, because as traders, we're looking at the right side of the chart. We want to know what is the future forecast, what's possibly new that's forming here that could affect, the balance in my account, right? If I'm trying to trade the stock, or I'm looking to trade the stock, what's the forecast like, and how do I forecast in an accurate way? And I think raindrops are really, really unique. If you can find a set of stocks, and I'm going to be working on this for the guys. I was just talking with Jake before we started the webinar that the Bullish Bears, we're going to work on creating a raindrop watch list, okay, for daily raindrops. And the reason we're going to do that, we're going to go through and scrutinize the heck out of the charts and try to find these raindrops in interesting points, because typically when they happen, you get a move within, not always, but it depends on the stock. You get a move within a couple days. There's some big reversal. It could be a 5%, it could be a 10%, it could be a much bigger move. And that is something that we want to look for and prepare for. And if you can find, moving averages, for me, I'm looking a lot at moving average crossovers. I'm looking at patterns, head and shoulders, cup and handles, inverse cup and handles. The list goes on and on. And you guys hear me? Some people are saying they've got no sound.
I can hear you.
Okay. Some of the people in the webinar, you guys might need to refresh, because I can see my screen. All right, some people have both. Yeah, if you can't see, guys, you might just have to refresh and rejoin. Sorry about that. So looking at UNH, we got a major top here. You could see that there was some weakness, blue raindrop, and then within several days, you started to get that strong selling move. And if we look closer on these candles, a lot of the selling is happening on the lower half. And then you start to get, I have the 9 EMA daily. 9 EMA daily is a momentum moving average that I use to determine entries and exits. And you could see it starting to curl over. And then it was just a matter of time before this thing really started to make its move. Now, interesting, you can also turn on the heat maps. A lot of times these heat maps will find specific areas that are, interesting resistance zones. Just clicking quickly on a daily heat map, you have this zone right here. So breaking down further, yeah, that produced a pretty nice down move on UNH and a double top situation. Now, eventually, these things are going to bottom. And you could see there was a lot of candlestick support down in this range. And look at that. We get another doji candle, doji raindrop at the bottom of this. And then within a day, right? Within a day and a half, 2 days, we were making our move back up, and we were snapping back up to test that 9 EMA daily. This 9 EMA daily is one of the major moving averages that I use on daily charts. I use them on hourly charts. I use them on 5-minute charts, and that's how I trade momentum. Typically, whether I'm swing trading or day trading, I'm trading momentum because I'm trying to take a large position, capture a decent move, and then I'm trying to get out before the shift, before I'm giving any profit back. So I'm going to show you guys just on a daily chart what that would look like for swing trading, and then on a 5-minute chart using multi-time frame analysis to give you guys some ideas about how to use short-term charts, right? So like a 5-minute candlestick chart versus a daily moving average. But first, let's look at some more raindrops. So AMD is pretty interesting. So AMD has had a couple of blue raindrops here. You can see right here we had one at a top. We had here another at a top. And it's really simple once you start to see, these trend lines, right? You can draw your own trend lines and see these breakouts and breakdowns. I love how TrendSpider highlights them. You can turn on the highlight function, so it'll highlight a breakout or breakdown on your trend lines, your automated trend lines. And another example of a blue raindrop and then a big move coming. Whether it's 2 days, 3 days, there's something setting up here, right? There's always something setting up here, and these are good, 3 to 5% moves after they happen. And then you just stick to the rest of your technical analysis. So you really want to train your eyes to try to find these. Like here's an example of a blue raindrop. It landed right on 100 SMA daily, right? And it closed above it. It did gap down a little bit lower and test this former trend line, which is pretty interesting, right? You always want to, you start finding these interesting trend lines where price is respecting them, extend them out to the right, right? Draw them all the way across, because the algos paid attention to this, so you should too, right? And that's what makes TrendSpider so beautiful, is that it's finding that stuff for you with this mathematical precision. So we did get a drop here, and yeah, we had a bigger move down, and now we're moving back up. We're still respecting this 100 SMA. And it's possible that this is just a failure, back test, retest type scenario. If I turn on trend lines, let's see, there's another line similar down here. I thought I saw a rising wedge earlier when I was looking at one of my other charts, but it's possible I was mistaken on that. So that's AMD, and let's turn off the heat map and trend lines there. TLT. So TLT is something that I watch for, looking at major markets and trying to predict, where's SPY going, where's gold going. The VIX. TLT is another chart that I watch to look for, are the markets going to be selling off? Is there volatility? What's the deal, right? So with TLT, we're getting some blue raindrops here right at support, right at that 9 EMA support, which again, for me as a momentum trader, swing trader or day trader, doesn't matter. It's all about momentum to me. And getting these couple blue raindrops, having them close very close above the 9 EMA was a nice signal for me. So you got a really nice strong move up. There's a bit of a kind of a bull pennant through here, pulled back to support, continued, eventually rolled back, and then of course we had this kind of like almost cup and handle that was started that just broke out. So now looking at the daily raindrop, right, there was, correct me if I'm wrong, this is the first half of the session, a lot of the volume, and then the volume kind of dropped off, extremely dropped off in this particular raindrop candle. And now we're getting these kind of shorter, smaller, fatter VWAP candles. Of course, we're just really starting the second half of the day, so this candle is going to change and develop. But I look at price to meet, whether it's halfway, whether it just trades sideways and lets that 9 EMA come up and meet it. And then once I start to see other candlesticks or raindrops form, then I'm looking for maybe another blue raindrop and then a breakdown, right? And then there's an opportunity to maybe take the short side of TLT or the long side of the markets. So I figured I would share that with you guys. This could be a useful tool when you're trading, major stocks like Apple, SPY, Boeing, and what have you.
Dan, do you look at gaps much?
I do look at gaps and gap fills. I look for gap fills to happen. I am looking for a gap fill on Disney. So, oops, that's DIN. Let's get the S in there. I was gonna say that didn't look right. So we have this huge gap created from earnings on Disney way down here at 126. So, we also have obviously some gaps here created from the most recent earnings. And interesting enough, right now we're developing a blue raindrop. So, looking at these other blue, this has quite a bit of them, surprising amount with the way that this price action is along the momentum moving averages. But I've got some bearish crossovers, right? I've got my 9 EMA crossing over my 34, my 20, my 50. We got support at the 100 SMA, which was common with a lot of stocks, and we've just got kind of gaps all over the place. So we're quickly filling some gaps up here from the earnings gap down. But my concern is that Disney potentially is going to gap fill this move from here, even though it's got a ton of great things going for it. There's an opportunity there. And if we turn on the trend lines, we can kind of see we've got this red trend line support right at our 100 SMA. If we break down below that, then we start that gap fill process. And here's that line. You're seeing some kind of breakout right here where we'll potentially test the trend line from the breakout. Sometimes the clean gap fill doesn't happen. Sometimes it happens as a result of an angular trend line versus just a straight up horizontal. So one of the nice things to do if you're trying to swing trade something like this, and you can set it and forget it until it shows up, create an alert at this line. So if I'm looking for a breakdown on Disney, and I want to know intraday when it's happening, I should say. So I'm going to switch to a 10-minute candle. Okay, and when a 10-minute candle prints below this trend line, and obviously it should be printing below this 100 SMA, there's a further down move opportunity, to the tune of maybe $3 or $4, right? So that's decent for an options trade or a short. You just get your little scalp and then pick how many days you want to set the alert for. If it's, I'll be patient with this and say, all right, this should happen in the next 2 weeks. I should get my breakdown. Maybe it's up here, right? These trend lines are moving targets. Same with the moving averages. And you can actually double up. So you can create your alert this way, and you can also create the alert because stocks love to react to these daily moving averages. You can create alert at the moving average as well. So if there's a breakthrough and you get a 10-minute candle that breaks through in the next 2 weeks, and of course you can label it whatever you would like, you're going to be alerted that, hey, this is breaking down here, not only the trend line but also the moving average, and then this would be your target, so you could create another alert for your target. And there you go. You got a whole trading plan set up for a potential gap fill on Disney that you just need to wait for the cloud alerts to email you, message you, and you're ready to rock. You're good to go. So I find this extremely useful. Just using just the daily and the daily moving averages and raindrops to be able to produce these swing trades or produce an intraday trade. I might only day trade Disney. I'm going to switch back just briefly to a regular candlestick chart and show you on a 5-minute chart some of the things that I would look for. And then I can put daily trend lines up right here, turn off our 5-minute. So here we go. We've got these same daily trend lines now dotted. So anytime you're comparing multi-time frame analysis, you're going to get dotted lines, whether they're moving averages, Bollinger Bands, or trend lines. So now these trend lines, I'm looking at these as potential breakdown areas, as well as, Bollinger Bands. Right now it's bouncing at the lower Bollinger Band off the daily. So, there's still potential for this to actually find momentum and move up. That trade might never happen, right? I might not get it. It might just continue up. I'm seeing a short-term inverse head and shoulders right here. So we have a left shoulder, we have a head, we have a right shoulder. But if things turn sour, the markets turn sour, they continue to sell off a little bit more, Disney kind of follows suit, I've got a nice trade plan. So either way, we're prepared to trade this in either direction just by doing a little bit of homework. And it's quick. You know, that took me no time at all. When I used to draw lines with Thinkorswim, I'm drawing my own trend lines, I'm zooming in, I'm fixing them, I'm moving them. It's like this entire process that is kind of cumbersome, and I make mistakes, right? We all make mistakes, whereas, you know, this automation system, it's using math, right? The math is perfect, it's doing its job, and I can really trust it versus my own trend lines. I could be a little tired, I might miss something. So that's not the case with TrendSpider. It doesn't miss anything. So really love that about it. I want to go through some more raindrops for you guys. We talked about looking at Netflix. And let's just go to daily and turn off this. And so you'll see I got a lot of daily moving averages. I just want to clean this up for a second so you guys can really focus on the raindrop pattern. So we got 2 raindrops here back in June 2018, you know, right at a double top. So perfect pattern showing you, hey, this is a situation where volatility is coming, right? And boy, did it come. You ended up with some bear flags, kind of a little bit of a longer bear flag here. But then yet again, we got that next blue candle, and then we continued down. And then you got another blue candle. And then within a few days, another move, another change of direction. So it doesn't mean you have to jump in on every single one and trade it. You can wait for confirmation. But when you see these candles, especially on a chart like Netflix, right, you get a really big move up, profit taking, makes pretty much a big kind of bull flag, and then boom, blue candle, and then a little top, and then there was just a couple of days of selling. This might have been, you know, considering the zone that Netflix has been trading in, you can just throw on the heat map and just see, hey, this is going to be a chop fest, right? Maybe I'm day trading these, I'm switching to a smaller time frame chart. You know, maybe I'm selling an option spread while we're trading in this chop zone. There's different strategies you can employ. You might just kind of say, all right, well, let me just look and see if there's a topping pattern. Yeah, there's a lot of failure up here. I'm noticing up in this zone. Let me see if I get a blue candle. Oop, I got my blue raindrop. Boom, here's your down move. So these are going to be very, very helpful to you as a trader if you can check these charts. And then in doing so, again, this is what I like to do. You guys might find this works for you as well. I sincerely hope that it does. You can give it a shot at least. We're all students of the market trying to learn from, you know, learn from each other, learn from other people. But what I look for, let's say you see, you know, a blue raindrop up in here, and the next day, look at the price action, right? So what I tend to do is I'm looking at a 5-minute chart, and I'm throwing on my 50 SMA 5-minute, and I'm throwing on my 200 SMA 5-minute, and I'm looking for pinching. These are kind of short-term momentum moving averages. I do still use the 9 EMA, and I use the 9 EMA daily as well. So you see this blue 9 EMA daily out here. This is something I look to for price to be a magnet to. What's incredible is if I'm in a trade and I'm kind of busy and I'm multitasking because I'm trying to you know, teach people how to trade throughout the day. We're always streaming in our group for at least a couple hours every morning, and in showing you guys these charts in real time. I don't want to be distracted by something else, because somebody will ask me a question, or, you know, my dog starts barking. He wants to go outside. I got to run outside. I'm going to create an alert. I want to know when this 9 EMA, when we start to get up to this 9 EMA, because momentum, price always wants to go back to these 9 EMAs. Doesn't matter what time frame you're on, you know, what style of trader you are, you're going to be dealing with this 9 EMA a lot. And for day trading, that's especially so. So what I look for on the 5-minute charts is getting these crossovers. When I start to see failures, I see big selling in the pre-market, I start to see my 50 rolling over, I know this is going to continue down. Only so far though, right? So I missed a lot of this pre-market move. There was an opening rally, and then it made a higher low. And then all of a sudden we got this nice bull flag, bull pennant situation right here yesterday. And then it broke out, and then it made another bull pennant. And then it kind of finished the day with another kind of sloppy, I don't know, you can't really call this a bull pennant. But let's see, if I turn off the regular hours trading data, it will let me draw segment lines. So if you guys have trouble with pattern recognition, I will try to, you know, do it a little bit here. But essentially you're getting these types of moves, these patterns I look for. They're not going to be perfectly drawn, so I apologize. But you're getting momentum at the 9 EMA 5-minute, okay? So when you start to see consolidation and price getting in this apex, and you also are starting to turn that 50 SMA 5-minute, that's a nice, these are two indicators I look for another move up. And then I just wait for the volume. So I've got my volume down here, and you can see the volume trend throughout the day, right? We're selling off on a 5-minute chart. And then all of a sudden, there starts to be a little bit of this erratic volume buying bars where people were slapping the ask. That's forming this bullish ascent. You could call it an ascending triangle, bull pennant. Don't get caught up in the patterns and the minutia. But when you start to see this, and these wicks are really respecting this this trend line, you're finding an area where, hey, the bears are strong, but the bulls keep coming up and touching it over and over. And then boom, you get your confirmation on volume. Ideally, I like to enter inside these types of patterns because I can manage my risk at the 9 EMA. So I'm prepared for a move up. I'm also prepared to be wrong, because if this trade breaks down, I have to respect my stop, and I'm going to sell. I'm going to sell in this type of pattern if this pattern breaks down, because chances are it's going to continue lower. And I was wrong. I got a bullish pattern and bullish convergence, but it's a numbers game, right? You're going to have losing trades and winning trades. But if I stick to my formulas, which I'm really good about because TrendSpider makes it easy, I get this big flag up, and this is my reward. And typically I like to sell into strength because I chose to be part of the group of traders that lined up for this trade, right? They didn't know what was going to happen. They had their bias, right? Or they wouldn't have bought, but they lined up. Traders lined up. They saw something they liked. They liked this low and then this higher low. They liked the pattern. They got their reward, and I'm typically selling inside here. And then, of course, now you're going into this looks like there were some after hours, and then look at the price action today. So now you're getting your 9 EMA crossing your 200 SMA on the 5-minute. You're also getting a bullish cross of the 50 SMA, again on a 5-minute chart, crossing the 200. And this thing is just riding the 9 EMA. Where do you think it wants to go? This is where I think it wants to go, right? And it might not get, within 50 cents of it. Maybe it puts in a evening star pattern or some type of, bearish candlestick setup that I don't like. Maybe it's getting really close to a horizontal level that I can throw on a heat map, right? I'm not seeing it right here at the moment. Maybe there's a daily trend line that I don't see, so I'll switch to more lines. Nope, I don't see any there. Then I'll switch to 5-minute. I'll check my trend lines. Okay, cool. So we broke out of this significant trend line right here. We got another little, I call these baby bull pennants because they're very small. They're only like 60, 70 cents of a move. And then there's the next leg up. So this might continue to ride inside this rising wedge until it hits this 9 EMA, which is my profit target. Previously, Netflix was a really good short. I can't really show you on this chart because I use Thinkorswim to stretch out 5-day or 5-minute charts to 10 days. So it gives me a lot more data. But if I were to do that here anyways, it would kind of make it a little bit too small, I think, for you guys to see. But this is part of my trading edge as a trader. I'm looking at these short-term momentum 5-minute moving averages, and I'm getting a really nice reward with using TrendSpider because I'm getting signals on these breakouts. So let me turn on the regular, there we go, after hours data, and delete some of the trend lines and daily. Now let's take a look at Cron. So Cron was pretty awesome this morning. A lot of people interested in pot stocks, the sector. Where is it headed? Great for earnings. So perfect opportunity to use this to manage your risk. So Cron had a nice W pattern, and look what it crossed. You watched 5-minute price action candles cross the 9 EMA daily. It had failed it in the past. It failed it here. We can actually go back and look at a 15-minute and get some more candles on here for us. But the 9 EMA was acting as daily, acting as resistance over and over again, right? I mean, it didn't even come close to it before it hit its some daily trend lines here. So we found a really nice daily trend line, made a tiny little inverse head and shoulders, and then it kind of started its, albeit sloppy, rising wedges, pennants to kind of move up and break some of this downtrend. But of course, you know, back to the lower daily Bollinger Bands, and it needs to, there's always weekends and stops being hit, and it's chaotic. It's chaotic at bottoms before momentum shifts around. And of course, earnings are coming up, so that's adding to that. So that being said, this was, again, it's a 15-minute chart, which I do view, but not as often. Let's switch back to a 5-minute chart just to keep it simple for you guys. And this is where we had our crossover of the 9 EMA daily. So it kind of held us down. Third time is a charm. Think about that a lot. Third time, fourth time are often the charms for breakthrough. If you keep seeing, it doesn't mean it's always going to happen, but it seems to be a magic number that I pay attention to if I'm getting criteria I like. So we're getting higher lows. We're getting, you could call this a sloppy cup and handle, a W pattern. You had the right amount of volume and price action to break this 9 EMA, and you were able to capture a 40-cent move at the end of the day before the earnings call. Now you got your earnings gap up, which I don't like to hold over earnings personally, but you get this move to, oh, what's this? This is the upper daily Bollinger Band. Look at the way price action's bouncing off of it. Do you think we should pay attention to this? Absolutely. So as day traders, wow, we crossed the 200. Wow, we crossed the 50. That's great. I'm so excited. Is it going to get outside the upper daily Bollinger Bands? I sure hope so. And you're having your a situation where if you're long this at this point, that you're a little excited that you could potentially trade a I can't draw it for you guys right here, but there's a very kind of sloppy, broken bull pennant. You have your huge flag, and if I turn the data off for extended hours, it'll kind of negate that. But I want you guys to think about, let's see, trend lines, if it'll find them. Yeah, even with more lines. So look at this, though. You're going to see where these wicks are. You're going to see tests of this 200 SMA. There was this really odd candle right here that printed. And what ended up happening is we ended up crossing back below the 200 SMA. And that is such a common thing with penny stocks below 20 bucks, 10 bucks. Dollar stocks, stocks below $1. They're going to have their catalyst, their move, their pump, whatever it is, and they're going to hit some daily moving average, whether it's a 200 or 50. Very common to hit the 250, very common to hit some lower Bollinger Band or some daily based trend line. So me personally, this is how I use multi-time frame analysis to make active day trading decisions. And what do you think I would do here, seeing this kind of selling volume and a break below the 50 and the 200, and my best friend, right, one of the 50 SMA starting to curl over, right, aggressively curling over? It's going to make a bearish crossover. I can kind of anticipate that when I start to see this drastic change in direction, right? And our 90 MA, of course, has already given up the ghost way up here. I mean, it's just going straight down, cutting right through this hump on the 50 SMA. And then finally, where are we back at? We're back at the 90 MA daily. We went right back. It's like it never even happened, right? And this is such a common thing to look out for. You know, there was potential for this to bounce in the mid band, but the selling volume was too strong. No chance. Close below it. I look at close price a lot, so don't be confused between wicks and close price. They're both important, but when I see a particular candlestick close that I care about for my trading plan below a specific moving average, that's a big deal to me. Okay, that's something that I say, wow, the bulls were not able to close above, this middle Bollinger Band or this 200 SMA in the 5 minute. I don't like it. There's no reason for me to go long or try to catch this knife at this point, right? And even down here, like this might turn into an inverse head and shoulders, although a kind of ugly one, and then bounce maybe back up to these momentum moving averages. And in truth, a lot of times after big sell-offs, they'll retrace a little bit and you'll get a bearish crossover here, but it tends to be where the shorts cover to. What I notice a lot after these big moves up and these huge sell-offs, even though this is technically a bearish crossover, like this was a bullish crossover 50 over 200 and it made a nice run. This bearish crossover here will be a little bit of a short covering rally, and then the shorts will reload the boat here. Typically, it doesn't happen a lot, but that's something that you can, or happen all the time. I should say it does happen a lot, but that's something that you can look out for. So that's Cron. We can take a look at SPY. I'm sorry, Jake, do you say something?
Nope, I did not.
Okay, so back over to SPY. Major markets. Everybody's wondering what the heck's going on with. Are we is this a real true buy the dip situation? Is it a is it just a retracement to a specific trend line? Here we have a daily trend line, which coincides again with the 90 MA daily. We also have the 50 SMA up here, and look where SPY fought its way all the way back to today. I mean, just a fantastic run, 250. Nothing like yesterday. Yesterday was just epic, right? So you had this bottoming situation where price action kind of bottomed just before the final shock down to the 200 SMA. But the bottom line, this was making a nice little rally, and then it didn't make a lower low from this particular day. And then you get your ability to, let's see if I throw 5 minute trend lines, and this is going to be very crazy here for a minute. Interesting enough, it didn't find that line, but that's okay because we still see, it's still populating. This is going to lag a little bit, so because of the way this is set up. Give me a second and I'll change it back. I should have known better than to do that because I just added a zillion lines to this. But essentially once this is finishes loading, this particular low, this lower low, and then we had some bullish crossovers on our moving averages. We're able to cross the, I believe this is the middle Bollinger or lower Bollinger Band, daily Bollinger Band. And we have price action continuing up. Uh-oh, I hope I didn't freeze this too bad. I might refresh this real quick, guys. Give me a sec. All right, let's see what we get for questions here. I'm probably missing some that you're asking, but I see that Dan is doing a good job. Let's see. You choose your MA in different time frames, and then they're dotted. Yeah, so your secondary time frames are always going to be dotted. And so when I have daily time frames, you're going to notice that they're dotted. They're dotted. Trend lines are dotted too, so sometimes you could be potentially a little bit confused because the trend line color might be similar to the, but you can change the colors of your trend lines. Jake was just mentioning. Turn off trends and refresh. Thank you. Let's see if it lets me do that. Worst case, if it doesn't, I got a backup plan, guys. You guys are going to like my backup plan while this is loading. Let's do, yeah. So I got the VIX loaded up here. I'm spoiled, guys. I have two accounts. I got the main account and the test account for TrendSpider. Do you guys use Thinkorswim? Because yeah, so Thinkorswim we use for charting a lot. I really like the volume studies that come along with Thinkorswim, but I'm still using them both in conjunction. So mostly I'm confirming volume, and I'm drawing very tight little bull pennants and ascending triangles and wedges. I'm finding those on Thinkorswim. And I have a ton of monitors for trading. So I'm able to, again, I'm a little spoiled because I have so many screens. I got a 34-inch widescreen is my main screen that I'm not sharing with you guys right now. But it's really nice to have the charts stretched out on the wide monitor, and so I can dedicate some other resources to it. So let's see, all set now. Let's see. I'm trying to get this to still turn off. I'm just going to switch back over to, because it's essentially the same. The staging site that I have, and I also have the watch list. So let's see, we were looking at SPY. Let me pull SPY back up. All right, so again, guys, just to reinforce it, it's another opportunity. If you're a momentum swing trader, momentum day trader, trading options, trading stock, I look at these daily moving averages over and over and over again for price to go back to, and they're breakouts, right? So again, here's the 100 SMA on a daily chart, and SPY crossed it with gusto, right? With the volume, with the juice, and you got to ride the 9 situation. We have a whole video in our next level training library on our site that talks about some of these day trading strategies in detail and kind of breaks them down. But this is what I call ride the 9 strategy. And we're now hitting some interesting moving averages where there's an opportunity to doji here, to reverse, right? We're at the 50 SMA. That's stuff that people should look at. What I'd also suggest you do is play around with the lower indicators. So a lot of times I'll look at the relative strength index RSI, and I will find where the daily RSI levels are, and is SPY trending above it. So you might have pretty choppy price action and an opportunity for a bounce, but it rides all the way back up to this 9 EMA here, and you're seeing, right, the bounce off the lower RSI moving to this upper level, and then there's a moving average, right, or a Bollinger Band. There's a daily lower Bollinger Band there that price decided to respect, and a trend line. Jake, do you mind taking it for just 1 second? I'm going to mute. I just got a visitor.
Yeah.
Thanks, man.
All righty. I'm going to take it over here for a second. One thing that I wanted to mention about Raindrops and kind of take a different approach here is looking at some of the actual volume profile on the price range. In this case, we're on the daily, And I want to show an example of kind of how you can look at that volume and see some interesting and useful information. So this is way back in October before we absolutely tanked into December. But what you can see here is I just simply put the line here, this line to this line, and then extended that. Notice how we have a third point here. So we've got a trend line that has 3 points on it. Essentially, it's just extending out. And what you can see here is this price action actually tried to break through this line, but notice that it tried to break through the first half of the period. And we know that this price action tried to break through during the first half because there's a volume profile here. So you'll see that, during the first half, the volume profile was at the high of the day. During the second half of the day, there was no volume during this portion of the price range. So we know there were no buyers at the high of the day into the second half of the period, and most of that volume was focused at the bottom of the range, and we had a continuation down. So this is a cool example of showing that volume is not confirming the move through, and then during the second half of the day, there was definitely a breakdown here. So compare that to when we finally did break out of this trend line, you'll see here that this literally is the exact opposite. During the first half of the day, most of the volume was focused at the bottom. And then as we kind of went into the second half of the day, you can see the volume profile starting to flow near the top of this range and actually creating new highs. So in this particular candle, when we did break out, there was a lot of volume here showing not only did buyers come in, but buyers during this period pushed price up into new highs during this day on January 30th. So it's showing us that this was backed by volume, and then this attempted breakout was not. And you can see that, the volume that there was on this particular day on December 3rd, there wasn't even a lot of volume focused on it during the first half. In this case, you can see a big bulge of volume here showing that there was definitely volume over this level. And then, if we look what happened after that, that was that was a breakout for a pretty big move up. So these are just little things that you can even check out about the volume profile on the Raindrop. That's one example. Another example is something that we call a raindrop. And a raindrop is essentially just a different kind of candle that looks at the same thing, how the volume profile is actually formed within the price range. Because as we know, this is the low, this is the high, and this is all the volume within that range. So in this particular period, we've got an interesting situation. We've got this breakout of this resistance, and we were really in quite a strong downward sloping channel here in May, early June, and that's when the whole market really tanked. But what's interesting here is you can see finally when we did break out through this resistance, it's interesting to see what we call a balloon forming here, and it's really when the volume is very low at the bottom of this range. So you can see we don't even have a volume profile for this particular price range on the second half of the period. So we know during the first half of the period, there was volume that pushed the price through this red line, but we can see most of the volume started to aggregate at the top of this price range. And this is kind of similar to if you were looking at a hot air balloon, or if you're riding in a hot air balloon, the reason that you're rising is due to that hot air bringing the balloon to higher heights in the sky. No different than the demand is rising throughout this price range, and you can see it starting to bulge at the top, and then we've got our continuation up. One thing that's cool about this, it's very similar to any other candlestick pattern you're going to look at, in the sense that you can have balloons form anywhere. Here's another balloon that forms, but we've got a red day afterwards. And the thing is, we only want to call this a balloon, or really a textbook balloon, when it's breaking out of a very crucial area. So another area that shows a pretty cool balloon is this double top area. So you can see here, we've got this double top. We start to break out, and you can see same kind of thing that we just saw on the Qs chart. There was volume pushing price up through this line. So we knew that it was possibly going to break out. And then we've got this balloon candle kind of forming afterwards, and just kind of showing that price is running away from, this area. Demand is rising, and then we've got a nice continuation before consolidating and then continuing up much higher. So really looking at how that volume profile looks on the chart on a particular raindrop can be very helpful. This is another example, right? So we had this previous top that we had to break out of, and notice when we really did break out of it, we had that volume confirming it during the second half of the day, and then we had a continuation up. So, notice this didn't necessarily tell us it was going to continue up. It was just telling us that during this particular period, volume was supporting price at a higher area here. And then we did, had our massive move down. But what's interesting here is, you've got your blue raindrop within 1, 2, 3, 4, 5 days. You've got a blue raindrop to blue raindrop. You've got a 3% move down on the common stock price. That can be huge on the option side of things. And one thing about raindrops, especially the blue raindrops in particular, is they are as Dan was mentioning, a possible signal of volatility coming. So you can do this with any chart, but what you can essentially do just to test this out and go on a chart by chart basis is I'm just going to delete all these, but you can go to the strategy tester, you can go to your entry condition and simply just put in the candlestick pattern, and this is the blue raindrop. So in this case, we call it the raindrop dash doji. This is what we want the system to look for as the starting point of the back test. The exit, let's say 10 candles. So when we test this, we'll see, especially on Amazon, the mean trade return is 1.28%. That's a decent return over 55 different positions analyzed. And so we can see each one of these on the chart up to 320 candles by just clicking see on chart. So when we do that, we can see going back all the way to June of 2018, we can see during this uptrend, and we'll go to the recent price action too, but during this main uptrend, you had some crazy swings. You had a blue raindrop and a 3% move up in 10 days. You had a blue raindrop and a 3% move down in 10 days. And so my point here is the blue raindrop is definitely not a buy or a sell signal. It's a signal that volatility in price is likely coming. And so, one thing that you can do if you're an options trader is maybe looking at creating a straddle or a strangle strategy around this, where you're really just betting on volatility. You're not betting on the direction of the volatility. You just need a big move to occur. And, you've got them. You've got here, in this case, you've got blue raindrop. And the very top, it went up 3%. It closed at 2%. And let's say that you did want to get some of this information about okay, we've got a blue raindrop, but there was a drawdown first. And then what was the max gain? This is only the return after 10 candles. You can go to download CSV, and you're going to get an Excel file of all that information. What's the max drawdown? What's the max gain? What was the lifetime of the trade if it's not just 10 candles? If you want to do a script, and sometimes, let's say you do a script with the MACD crossing to the upside, and then the exit condition is the MACD crossing to the downside. That length of time for that entry and exit isn't always going to be the same. In this case, it is the same because I just said after 10 candles, what's the return? But you can get very robust with the strategy tester. This isn't just for raindrops. You can use this on any strategy you're looking at. So I know there's a question. Let's say if we wanted to look at maybe the condition is the price. And in this case, since the raindrop doesn't have an open or close, you would want to say the left side is has, let's see, increased, no, excuse me, greater than the indicator. This would be, let's say, the exponential 50. And then what you could do is you have to finish that condition with the daily price left has crossed, oh, I'm doing this wrong. So it is greater than, I'm sorry. So price left is greater than the daily. You could do a script here. Let's say the price left is greater than, and then the script at the end is the price condition price left is less than the indicator EMA 50, and we could even test that. So there's a lot of different things that you can test on the chart. So essentially, this is just a way to speed up that process and really get different things, different information without having to manually do it. In this case, I mean, the daily price left is greater than the EMA 50, and then the exit is when the daily price left is less than the EMA 50. That alone gives us a 2.74% return over 60 positions analyzed. It's a decent return. So, we could even see that on the chart. Remove this execution mark, see on the chart, and let's do this. Remove all, see on the chart. And you'll see anytime this has occurred, this is the exit. So here, this is kind of skewing the data a little bit. Here's our entry over the EMA 50, and here's our exit after 24% when we finally broke down. So any different strategy you want to test, you can do that. And let's say that you do like the test that you ran. You can easily go to alert me next time this happens, and then it immediately pulls up this alert criteria. Alert me when the daily price on the Raindrop, the left VWAP, is greater than the daily EMA 50, and we'll be alerted next time that happens. And you don't have to do any coding. There's no Pine script, there's no Python. It's a very easy to use visual interface where you're simply just doing this is that, this is this. All the coding is done on the back end. So all the hard work is done by the computer. You're just simply putting in the logical conditions you're looking for. And let's say you have more. You can even do, let's say, add the daily MACD fast has not decreased. Say the daily MACD fast has crossed above the slow. So you go, the fast has crossed up through the indicator, daily MACD slow, and that would also be a MACD cross. So in this case, I'm looking for a Raindrop cross above the EMA 50 and the MACD fast to cross above the MACD slow, which would insinuate a MACD bullish cross. So that's just the way you can really utilize the strategy tester and alerts when using these Raindrops. I know I talked for probably too long. I want to hand it off to Dan for some last comments, but we are getting close to the end here and open to taking some questions.
Sure. Yep. I can share my screen again too. I'm good to go. I got both of them up. Thank you, Dan, for resetting that for me. Yeah. So guys, just while Jake was going through that stuff, I went through a couple other charts. Obviously, gold is got a lot of people's attention right now. So I wanted to take a look at the gold chart and kind of look at the major support resistance levels, the angular, I call it angular momentum, you call it velocity, the trend line resistance that, forms that's worth paying attention to, right? And when you get these massive gap ups, right, a lot of times they will just fade. They don't necessarily always go right back down. But because of where we are with the market, there's an opportunity for a decent size move with this coming back down and testing this trend line and then potentially dropping below it. A lot of times gap ups that break these trend lines want to go back and test it. And if they're going to bounce again, they'll bounce again here. But this particular move, guys, is almost vertical. It's almost straight up on GLD. So that's very, very unusual to not get some massive amount of profit taking, considering the amount of people who bought at various levels in this range. So I consider I'm always thinking about the groups of traders, and I try to explain this a lot when I do my live streams. Pick which group of trader you are and realize the other traders that you're either lined up with, what they're thinking, and then the ones that are not part of your group, right? There's another group of traders who have a completely different plan than you that are going to be taking actions that could essentially affect your profits or losses dramatically. So, and with that, all these traders that are in this long, they've obviously, some have sold off, others are still holding. We now have that interesting daily candle. These are actually currently 2 red candles on a regular candlestick chart, but we've got that blue doji. And yeah, VWAP showing that, or the top of this Raindrop showing that a lot of the buying was pretty good in the beginning and the second half of the day. But there's an opportunity now for a big move, and maybe a big move is, $3 or $4, maybe it's 5%, maybe it's less. But when we see these types of candles, we want to take note. It seems within a day or two, we're getting some kind of move. So there's something to that. And with that, you would switch and look at your shorter time frame charts. For me, 10 minute is very nice to use for day trading too. We have a couple traders in our trade room that are using that versus the 5. You can experiment with it. But taking a look at the 5 minute again on GLD versus the daily moving average and cleaning up the fibs, right? We've got sort of this momentum that's kind of taken us lower. There's a chance for our momentum moving averages to curl up. We haven't even come close to our 200 SMA yet. There still could be some range trading for gold. This could cup and handle. There's no really true confirmation of a reversal or sell-off yet, but this is why I watch GLD along with TLT and SPY and the Dow and the VIX. I wanted to show you guys really briefly too. Jake and I were looking, oh, I need the dollar sign here. We were looking at the VIX. So when I day trade, I'm always looking at a VIX chart. So depending on what chart you have with TrendSpider up, you might have to, look at a VIX chart on another chart, but at least get your analysis done here too. There's no reason to not have quick analysis on this and jump around. But for me, I want to see where the buying and selling is taking place at these major moving averages and then these short-term momentum moving averages. And again, look at VIX yesterday, just a, terrible sell-off. And now it's open today. We're back below the 9 EMA daily again. So again, these 9 EMA dailies, they act as magnets. All these major moving averages stuff do. There's the 200. So if VIX continues, and I should show you briefly too, the hourly chart, and I'm gonna, let's see, clean up what we don't need at the moment. We're gonna get rid of drawings. I want this to be pretty clean and explanatory. So we've got the 50, the 9, the 200. Yep, that's what I want. Okay, so here you go. Big reactionary move above the 200 SMA daily. That's this blue dotted line. We've got your kind of blow off top with a gap down. Now it's struggling. It's now struggling back below the 9. And you'll notice that the 50 SMA hourly is starting to curl over. Again, we got a big bullish crossover on an hourly, just like we would on a 5-minute chart. We got it on a 60-minute chart, right? And we also had a bearish crossover here on the 50 and 200 on an hourly chart. And you could see the 50 just acted as resistance for VIX, which would have been very nice for you if you were buying stocks and you're seeing the VIX sell off like that. That was a good sign. Yeah, there was a little pop in volatility towards the end of June. And then, the sell-off just resumed. It maintained below the 200 SMA. But once you got all this buying above the 200 SMA on the hourly, and you're coming real close to that 50 SMA daily, and you're starting to get this curl up, this is a big deal. This is a big deal. It's a big bullish crossover. This was kind of signaling, hey, the VIX is going to spike. And that's where, for me, I'm looking to trade to protect myself with, maybe some Q put spreads. Maybe I'm selling calls against the SPY, selling some bear call spreads, or I'm just trading straight UVXY options, right? So rather than look at the VIX for that, I'll go over to UVXY and kind of see some similar type of analysis and go, okay, cool, I can day trade some UVXY options today. And then look, you had a double top, this kind of shooting star, very long wick candle, and the rollover. And again, back at the 9 EMA daily. So this is it's very cool for, it doesn't matter what kind of trader you are. You could be doing this with crypto. You could be doing it with futures, your swing trading, your day trading. I really wanted to show you guys my edge, just one of them. It's just one of the ways to focus. I'd like to do another webinar with you guys just focused on trend lines, but I thought it would be really fun to pick the moving average study for the most part and focus on that, because sometimes having too much jumbled into one webinar can be a little bit overwhelming. And I really wanted to reinforce these trading concepts to you. A lot of people, I think, are looking at, 1 minute charts too for day trading, which I certainly do. This is really the last thing I want to show you guys is I get rid of the 1 minute moving averages completely. I completely get rid of them, and I put on all of my 5 minute moving averages. And I'll do this in a split screen. So I'll switch to 2 charts, and on my bottom, I'll have my 5 minute versus my daily. I'm not going to do that now, but I want to know what's going on with those daily moving averages still. And you can do this up to 4 charts, which is incredible. So I could do other time frames and really shrink the screen, but I'm not going to do that for you guys now. What I am going to show you is 1 minute candlesticks, because I take my entries on the 1 minute candles. Even though I'm looking at 5, I need a good setup from a 5 minute candlestick. And with that being said, UVXY is a bad example right now because it's bearish. I want to show you a long example. Okay. Well, what do we see here? We got 1 minute candles, and we've got them touching 5 minute 9 EMA moving averages. And what do you notice? What do you say? Buyers come in. And if you're watching tape, like I like to watch tape, meaning I like to watch the time and sales, I look at level 2. I'm a bit of a multitasker where I'm looking at a lot of different things. Another reason that I'll use Thinkorswim for broker information. You still have to place your trades on something. And I place my trades everywhere. I don't just stick with one broker, but we're a trading community that likes to evaluate a lot of products. So it's kind of just comes with the territory. But you get some really interesting price action off of these momentum moving averages. And maybe they come down and test the 20. I have the 34 here, which is another momentum moving average that I've identified as being particularly useful for penny stocks. I'll try to show you a penny stock in a minute that I have up here that suggests that. But you get this really nice price action right off the 90. There's no reason to sell. There's absolutely no reason to sell because not a single 1 minute candle has closed below the 9 EMA on the 5 minute moving average. So I find this extremely helpful for momentum trading. And this is something that only TrendSpider does to utter perfection. So let's take a look at MBRX briefly. Now this one has kind of spotty volume, but you can see a similar situation, right, where these 1 minute candles are riding the 9 EMA. Now they might come down and test some of their lower momentum moving averages, but they bounce in that zone, and this thing could cup and handle here. MGI, similar, right? Not a ton of volume, but you can see where it spikes above and sells off. And on these types of trades, a lot of times we'll look for something with a lot more volume. Let me check out the surging volume scanner right now and see if there's something good. So to my left, I'm looking at my trade ideas screen, and OMI is currently on the surging volume scanner. So I see a nice ascending triangle right here, right at the 9 EMA with 1 minute, and then boom, volume comes in, and there's your reward. So you're buying at support, and you're selling into strength. Typically, there's a lot of sellers obviously back here, but this thing still was riding the 9 up until this point, and then it just pulled back to the 20 EMA in the 5 minute. So dip buyers who missed this whole move, who don't want to buy up here, which I wouldn't recommend, are waiting for this pullback on a 1 minute to hit this momentum moving average. So if you're trading this way, as you should, you're getting the best information for making trading decisions, and you can really create your own rules around just these 2 short time frames for momentum trading. So I really wanted to leave you guys with that and try to do it yourself. Obviously paper trade any new strategy first. Get used to it. You're giving yourself new information, and this will work on anything. I'm just showing you stocks. I don't really trade crypto. I have some that's just sitting there for the grandkids someday. But everything else is, it's pretty much stock or ETF or ETN related. And that's the kind of stuff that we trade in our community. We do a lot with options. I'll day trade options. So for example, I know I'm stretching the time limit here, but with Apple, very similar situation where you're able to trade calls, and I recommend doing a lot of research before you trade options. It's not for the faint of heart, but if you get a situation where you have a chart like this, that 1 minute price action is trending, look, you have 200 to 202. And as long as you're buying the right strikes and don't try to buy options that expire the same day. If you don't know what you're doing, it's extremely risky and too volatile. But there's opportunity to day trade options with higher price stocks. So that's something I do. I'm very, very versatile. I just look for opportunity, and if I can find it in options, if I can find it in trading just straight shares, that's the kind of stuff that I'm looking for. So I hope that helps you guys all. Thanks for listening, guys. Thanks for having me on. I really appreciate it. A lot of fun.
Thank you for jumping on. I want to go over one quick addition. I'm not sure if you ever used the anchored VWAP before?
Yes, I've been using it a little bit more lately. Where the heck is it on my?
So you just right click. So I'm sharing my screen right now. Yep. So if people want to kind of see how this works, this is a indicator that was created by Brian Shannon, who started Alpha Trends. He's one of our partners at TrendSpider. And what you can do here is you can anchor the VWAP anywhere on the chart. So it kind of looks similar to how you use your moving averages, but what you can do is you can anchor a VWAP from an important area. So for example, I want to anchor the VWAP right here because this is where we had a massive pivot and essentially a reversal in the trend. And so what's cool is when I create this VWAP, you can see when we finally did break down here back in June, this is literally right where we bounced.
Yeah.
With that VWAP. And then, this is also an area where I would have definitely been looking for a potential further breakdown if, if this previous support now acting as resistance did break down. So just wanted to highlight that for those who were on previous webinars but haven't seen this new feature. This is a really cool feature, and you can create an alert on it just like any other line or moving average on the platform. So pretty cool feature. Let's say that you were really following this and you wanted to just create the most sensitivity on this line as you can. That means anywhere within this area, you would have gotten an alert if the price action would have gotten there. So just a way that you can kind of choose a zone rather than an exact line, and also how you can use the anchored VWAP. But I know this has been a long presentation. Thank you everyone for listening in. If you have any questions, please feel free to reach out. Last thing I wanted to mention, just a couple things to show the roadmap. In the next few months, we are working on market scanning. So a scanner is going to be huge. The ability to have a watch list and then have a multi-factor alert on the entire watch list. That's coming. The ability to also have new data feeds. So really international, different equities. And having more advanced backtesting statistics is what we're focusing on the rest of the year. And then into 2020, we really want to get brokerage integration in so you can make these alerts and then actually act on them where you're buying and selling. So that's the roadmap for the next 6 to 8 months. If you are interested in checking out the platform, you do have a free trial for a week. But if you do want to get a coupon code to use once that free trial is up, you can use BullBear30, and that is good for 30% off for 12 months. So thank you, everyone, for your time. This really the middle of a working day. We really appreciate the commitment to checking out the platform. And thank you again, Dan, for jumping on and sharing your strategies with us. And we look forward to doing another one of these again soon.
Very cool. Always a pleasure, guys. Love you guys. Thank you so much, everybody, for watching. Hope you guys enjoy TrendSpider as much as I do and profit bigly.
Awesome. Well, just to answer that question, we are working on a few different brokers, but we do not have any set in stone that we are going to work with yet. We will update as we get more information on the brokerage. For the difference between the regular VWAP is taking into account all of the data on the chart. The anchored VWAP is just starting the VWAP from a particular point. So whether that's a point in time where there's an ER, earnings release or something like that, you'll essentially be able to get a more focused VWAP, and that's anchoring it. So a lot of the time, if there's an earnings release and there's a gap up, Brian likes to anchor it from there because it's kind of a status quo in the price. So that's the difference between anchoring and regular VWAP. You can check more about anchored VWAP on our website in the blog post, and we've got some information on that and some links to Brian's strategy using that. Do I have to sign up? I think does not work for me. No, Vladimir, you do not have to sign up. You can easily cancel your subscription through the app. And if, let's say that you really do need a little more time or something came up, we are pretty flexible on giving you a couple extra days to try out the platform. For those that trade FX, we will definitely keep that in mind. Ross, just a heads up, we do tailor different webinars to a specific type of partner. So Dan is a big stock trader. We do have some partners who are more on the FX side, so make sure to check out our webinars that do focus more on the FX side of things. I think we actually have one coming up at the end of the month with one of our partners. So definitely sign up to our mailing list and you'll get all that information there. So thank you everyone for giving it a shot, for those that do, and thank you everyone that joined in. We really sincerely appreciate your time, and I'm going to go ahead and end it here so everyone can get back to their daily.
Real quick, guys, if you guys want to, I'm just going to do this just for new members that are not already in. We have really good pricing for our membership. So if you guys want to be able to see me use TrendSpider weekly, if you send an email to bbteam@bullishbears.com, I will reply. Just say in the subject TrendSpider webinar, I'll reply with a deeper discount than what we advertise on our website. So we'll give you guys our best discount. You guys want to come in. Again, you can try us for 2 weeks. If you want to stay, it'll then roll over and you guys will still get a huge discount. That's pretty beefy. So just wanted to offer that to the people on the stream.
Good stuff. Well, thank you so much for your time, Dan. We still have some time left in the day to even check out the market. So
yes, we do.
Good luck trading today to you and everyone in here. And we will definitely be doing these more often. So make sure to check out our social media accounts and see when these are coming up next. Thank you so much, everyone. Everyone have a fantastic day, and we are signing off. Thanks so much.
Bye, guys. Thank you.